Let's decode then the move that we've seen within the broader markets. From those lows, the ferocious up move within the mid and the small caps. Does that mean that the kind of pullback that we're seeing is spelling out a larger correction, or is it just a bump along the road? Feroze Azeez, Deputy CEO Anand Rathi Wealth, joins in to analyze that and lots more. Thanks so much for taking time out, Feroze. Let's just begin by talking about the kind of move that we've seen within the broader markets of late. What do you believe that is? What do you believe that indicates?
Aman, it indicates a lot of stuff. We had gone long on small and mid caps, small caps largely on your channel as well on 3rd of January this year. So this indicates several things. One, which is a clear difference between 5 years back and now, especially in the small cap space, is FII's participation has gone up dramatically in the small cap space. Earlier, the FII would want to play the India story only with the top 50 or the top 100 stocks at best. Now he or she wants to play the India story from a broader theme perspective. And these small cap stocks are low on market cap generally. So there's less of free float in terms of rupee value of free float. So PEs get elevated significantly because FIIs are a little price insensitive or they are not price elastic, unlike the domestic guys. So they're buying India, not buying the specific stock alone. So that's why you see several re-ratings. And wherever you've seen PE re-ratings, you see the FII exposure change. So I analyzed the about 10 companies which have had the largest change in FII holding in the small cap index of Nifty Small Cap 250. You would see a substantive move in terms of price movement and the PE movement if FIIs increase the stake. So point one I'm making is it indicates that broader market interest from FII has gone up dramatically, mathematically so. Second, it says that India is a reasonably large number of stocks in the capital markets, largest in the world, in fact. So India can't be represented by the top 100. So the domestic guys have also had flows over the last few months. So there's several things, but I'll stop here for the next cue from you.
Office nahi aaya. Your office is like right opposite our office. I asked our guest team, they said Feroze bhai is busy in his office. Office to samne hi hai.
No, actually I was traveling. Otherwise, it would be an honor to be in your studio.
No, look forward to that. My question, Feroze bhai, is very simple. There is a lot of narrative which is that, okay, there is a bubble and a trouble in small cap stocks. Small cap stocks in a tortoise and a rabbit race are like rabbit right now, and they will not reach the finish line. But it is time now to bet on the tortoise, which is large cap stocks. Do you think a strategy do you think anybody is watching the show and if somebody wants to check asset allocation, is it time to book 15-20% profits from small and mid cap funds and perhaps migrate back to large cap stocks or large cap funds?
Nikunj, first on a conceptual level, I have a little disagreement with the narrative built. See, small cap stocks are the top, are the bottom 250 stocks of NSE 500 as per SEBI's definition for a mutual fund investor. Putting 250 companies in one judgment itself is fundamentally incorrect. And you would be, I'm sure you would know, or you would be surprised to know, like I discovered, the smallest stock in the small cap index is a 3,200 crore market cap company, and the largest one is above 50,000. And it's still called Suzlon Energy is the largest index in largest weight in the Nifty Small Cap 250. Now, a 50,000 crore company is also a small cap company. A 3,200 crore company is also a small cap company. There are 51 unicorns in this country who are not a part of that small cap index because of the index formation methods. So putting paint, coloring them with the same paint or same brush is not right to my mind. So the name of the game is to be specific in small cap. Nifty, you can be more broad-based. You can judge 50 companies as a basket because they represent a larger free float, almost 65-70% of India's free float. So point one I'm making is don't do the mistake as a viewer, I would like to say, painting them all with the same brush. I'm not saying they're not undervalued or overvalued. If the largest stocks is 106 PE, and there's another stock with 9 PE in the same index, how can valuation be same for all of them? But now, if that's not the criteria, then what is? If you look at the Nifty Small Cap 250's value today, close to about 13,000, the earnings estimate tells me that the PE is still 19. And if you look at the froth in that index as a whole is negative. Even if you attach a 21 PE to it, 1,000 points of further rally is expected. But the name of the game is to get specific and not be judgmental about the broader headline numbers.
थोड़ी ट्रेड सिक्योरिटी की बात करते हैं. Which are the top 3 small cap funds which you are recommending as a house? I mean, I know you charge fees for that, but maybe I'll urge you to say it on air for free.
Of course, I'll do that for free because I don't have any variable cost. I've already put in the request. I'm more than happy to get you of any assistance to anybody. HDFC small cap, Invesco small cap, and Birla small cap. All of them have a very different approach, is why these are the 3 small cap funds. Chirag Setalvad is a great fund manager. In spite of the size, he has the knack of smelling businesses. When you look at his portfolio, there were about 17 stocks less than 5,000 crores, and those were not stocks picked by all Janta. They were brought into the portfolio much before the market woke up. That's Chirag Setalvad. Tahir Badshah is managing the Invesco small cap fund, a smaller size small cap fund, which is getting inflows. So I think Tahir Badshah has shown his capability in the small cap even when he was in Motilal Oswal. So that's the second fund. Third one is Birla small cap. It was one of the underdogs when we picked it up. Of course, people would never want to buy it, but this year it turned around and it became one of the best in the 385 active funds. So I think these are the 3 funds which have a complementary nature in the small cap space. But we have a research team which on ground works to find out flows in the small cap space for the month before Amphi gets to know it at the end of the month. I think the estimate is by now, in the month of November, we have seen about 2,400 crores of inflow in the small cap funds. If you look at all the small cap funds in the space, and liquidity seems to be still chasing these categories. So I think a few months later, I would be a little more worried about valuations here.
Years forward, last 3 years, small caps have given returns which are better than large cap. 3 years, will the tide turn? Like they say, cyclicality is always at play. In this tortoise versus rabbit race, tortoise wins in the traditional story जो हमने पढ़ी है. मगर in a mutual fund, sometimes tortoise आगे होता है, sometimes rabbit आगे होता है.
वाह, निकुंज जी, जैसे आपने कहा ना, अगर हम देखें आंकड़ा 3 साल का स्मॉल कैप ने आउट परफॉर्म कर दिया. हमने जब स्मॉल कैप को अपने पोर्टफोलियो में 5% से 30% का निर्णय लिया था, तो हमने बहुत सारे एंट्री पॉइंट्स देखे. अगर एक एंट्री पॉइंट देखे ना, तो क्या होता है कि उसमें एक बायस सी आ जाती है, क्योंकि स्टार्टिंग पॉइंट पे निर्भर करता है. अगर हम इसमें 5 साल डाल दूं और 2018 आफ्टर द IL&FS crisis, you would see small caps got rogered. And you would see underperformance for 5-year period. Almost about 4.7% was the underperformance of Nifty small cap vis-a-vis Nifty on the day when we gave the recommendation. So if you look at the number of days in the small cap has traded, I think it was 2007 to 2008, and then see how many times has it underperformed Nifty. We are still in a 5-year pocket of underperformance with respect to Nifty. On a 3-year performance basis, of course, like you rightly pointed out, it has outperformed. I think there are several ideas inside small cap. So a great canvas for a fund manager, he can capitalize. So I'm not too worried about the 3-year outperformance, because if you pull it a couple of years behind, the outperformance disappears.
Let you go, Feroze. Leave us with the best portfolio allocation right now. What would be, your exposure to mid cap, small cap, gold if at all, other asset classes?
Yes, so in the large cap, in our current 14 scheme model portfolio, the implied large cap exposure is about 50%. There is about 29% of small cap and 20% of mid cap. It is very, very contrary to how a person would believe. 50 is for large. Generally, mid caps have a larger allocation than small caps. We've turned it over its head. Small cap has a larger allocation than mid cap, because we're not very comfortable with the 150 companies. Earnings potential, which is called mid cap. Now, coming to from an asset allocation standpoint, I think India is going to an election year. Having large portions of debt is going to be very detrimental. India's allocation to debt is significant with respect to only about 12-13% of India's households have equity, and the rest of the 85-87% is debt and other instruments. So I would say that going into the election, if you stay out and stay in debt, it would not be a great thing. So I would say very little allocation for long-term monies in debt. Gold is definitely a great hedge and a good plan B. You can have sovereign gold bonds because you get a fillip of almost about 4% per annum because of the tax advantage and also the fact that you get an interest. So sovereign gold bond is gold plus plus. And if a person realizes that and converts all his gold, which is coins, bars, not jewelry, of course, the women would be very, very upset with that recommendation. So coins and bars could be converted to sovereign gold bonds. That's a more important efficiency item in the portfolio than buying new gold itself.
Good to have you on board. Thanks, Feroze, for joining in.